What did you think of the numbers and the market treatment of those numbers? Good morning, sir.
Good morning, and thank you so much for having me on the show. So I thought the numbers were great for Facebook. Revenue came in about 4% ahead of consensus, while operating profit beat by a handle 20%. So really strong numbers, but I think that the stock reaction is really just a function of positioning. So as we all know, in recent weeks, we've seen massive outperformance of the NASDAQ relative to things like the IWM, so the Russell Index, and also the EEM Index. And this is really because of the China issues that we all know, and they shocked the market, so they forced investors to more or less fly to quality stocks. Facebook was a target of one of them. So Facebook is a subject of missing buy-side expectations in our view. Advertising revenue growth of 57% came in line with consensus and was certainly really strong. But given the outperformance of the stock recently, we think that the 57% growth that they put up in the advertising line actually fell short of investor expectations that had bought the stock. Therefore, that was part of the cause of the down 3, down 4% aftermarket trend. Also, the advertising revenue growth deceleration that they guided to on the call is something that probably will worry some people. But we think that overall, we've seen Facebook do this before. They've talked about revenue deceleration in the past. They're always a conservative management team. And I think that the thing that people really need to focus on is how strongly they were able to even grow ad pricing in the quarter. So their ad pricing growth is really a function of Facebook's enhanced technology, which is really just top flight amongst any company around the world. So we don't think that there's any issues for Facebook kind of going forward, but this was a question of over positioning in a name, buy side expectations being missed.
Yeah, Josh, very fascinating summary there. Thank you. But I mean, look, back in late 2018, you could have bought this stock at exactly a third of its current value. And I find that's an extraordinary rally over such a short period of time as well. Is it possible, you run a long-short equity fund as well, and I know that short side of equity funds is always the problematic side of it from anyone I know who's ever run one of those as well. Is it possible to short major US tech names these days, despite that enormous rally we've had, and despite the still quite frothy valuations in some cases, despite, again, the growth trajectory which you've just outlined there?
I think it's not really an outright good idea. I know that people could kind of position for a short in some of these names, but it's really a short-term thing when the NASDAQ kind of gets overextended and then you feel like these names are kind of topped out relative to other names that have underperformed. But I think that over time, what you're seeing is that these walled gardens, particularly in the internet space, continue to just attract more value because really they're seeing a bunch of different things: technology enhancement, data enhancement, leading to better ad targeting and ad pricing, as well as, of course, the engagement boom that they got during the pandemic. So in our view, no, it's not a good idea to sit there short the FANG names kind of over time thinking that, they're going to perform negatively. But in short periods of time, sometimes they work as relative shorts from a positioning perspective.
What does Facebook need? I mean, I know that there's all kinds of, and to take a Google word, moonshots out there from Facebook of what they're looking at, computer platforms and what have you. But what does it need for the next leg? Or does it just need to carry on doing what it's doing now, Josh?
I think that for the next leg, Facebook needs to prove a couple of different things. So first of all, they need to prove that their engagement can really continue to grow at this rate post the pandemic and as the world continues to go back to normal. So as you know, we've been seeing some of these issues elsewhere. Twitter kind of users came a bit in line. Pinterest surprised on users negatively last quarter, and that's still a hot button issue on the stock. So far, we've seen Facebook's user engagement continue, but what we saw this quarter were DAU and MAU numbers that were more or less just in line with consensus, when before we've seen kind of engagement beats. So Facebook needs to show that really the engagement across their platforms can continue now going forward, which we're not really worried about because, as we all know, using Instagram is very habit forming. And I think in addition to that, they need to show that the pricing trajectory can continue based on appropriate ad targeting that's really not at risk by any upcoming regulation. And I think that they've just done an amazing job at that, so far already. So again, we think that going forward, Facebook will kind of, user engagement is definitely a question mark. And I think that that's something that investors are going to wait to see. But I think that Facebook's technology machine is going to keep kind of churning along, and we're not worried about the company's future performance.